life is good. We don't have a recession. One year ago, the Fed said 0 chance of recession. Inflation is transitory. There won't be any inflation. We don't see any chance of raising rates anytime soon. You have no pricing power because there's no excess demand. And costs rise, your profits go down, and incomes actually go down. We have a devaluation of currency. And that devaluation of currency is why everybody is feeling poorer. And so you're not seeing that concomitant rise in incomes because you go to the grocery store and $20 doesn't buy you anything. U.S. government, right? The countries themselves. So what do you have to do? You have to generate inflation. And the problem is, at some point, it stops working. And that's what Japan's faced with right now, right? They've been trying to generate inflation for decades. I mean, think about this, right? They had super high inflation, right? Remember Japanese real estate prices? If you look at our M2 growth, we look like amateurs compared to the Japanese. I mean, Japanese M2 growth, I mean, it's literally a parabolic curve. And yet, no inflation, no high interest rates. It isn't like a depression, but they've been in no way, shape, or form able to generate any inflation. So what do? They just buy their own debt. So they are buying up all the debt. Now we're trying, because we can't buy all our debt because there's just too much of it. We have this problem that we have to try to inflate it away. So this whole thing about price stability, it's Shakespeare. The lady doth protest too much, methinks. If you have to tell me over and over and over again that you're worried about inflation, you're not worried about inflation. You like inflation. It's exactly why JP Morgan spoofs the price of gold every single day. And they will get fined another $1 billion this year. And they will say, so what? We make $20 billion spoofing the price of gold. And it furthers our national interest because we are trying to discourage people from owning gold and get them instead to buy treasuries. But then he went on, because I asked him another question about crypto. And he said, well, blockchain. Yeah, definitely. I should have my blockchain, not Bitcoin socks on, or Bitcoin, not blockchain socks on. Blockchain, definitely. But, these things that you call currencies, these tokens, just a Ponzi scheme. We want a stronger currency. And I think one of the challenges for the United States is this change in the nature of import versus export because of oil, right? When we were a big importer of oil, strong dollar was great because we were putting dollars out into the ecosystem. We're selling oil. And if it's priced in dollars, that's people have to come up with dollars, which is what's putting pressure on these foreign countries. But ultimately, it's anathema to any of our businesses that are trying to export. Again, that was one of the things Jamie was talking about is, that properly regulated cryptocurrencies, stablecoins could be good. What that means is we get first dibs. And, the incumbents don't like the fact that money fiat is leaving the banking system, converting to stablecoins or other cryptocurrencies and living in this other ecosystem. And so, when it was a couple $1 billion, no big deal. Tens of billions, no big deal. Hundreds of billions, now it's a problem. Because our banking system, even though it is better, it's still not awesome in terms of health. So it's better. It's better enough that you can raise rates, which they are, off zero, the new technology. And the banks could participate if they so choose, but they won't, right? Well, history says the incumbents choose not to change because they're afraid of giving up their gravy train that they've worked hard to create. We did sanctions against Russia to crush their economy and crush the ruble. The ruble went up, and their economy is actually killing it because they're selling lots of oil and gas at significantly higher prices than, so I find the weaponization of anything, maybe just axiomatically, right? The weaponization of things is bad.